Syariah contract ensure financial transaction complete with Islamic principle. They are based on Quran, Sunnah, Ijma' and Qiyas. Islamic finance prohibit riba, garhar and mayasir. This contract promote ethics, transparency, justice, murabaha in cost plus sale. Contract, the seller disclose the cost and adds agree profit margin, is widely used Islamic banking, commonly applied in property, vehicle, trade financing, predictable return for bank. Syariah complement alternative interest based on loan. Some predictable resemble conventional loans. Banks may not fully assume asset ownership or raise concern about some status over from fintech and digital transaction increase complexity. Issues and asset ownership risk, transfer and contract extension, regular like Bank Negara Malaysia and AAQIFI provide guidelines. Murabaha is Sharia complement sale contract that is widely used in Islamic finance, especially by Islamic banking. It is cost plus sale, where the seller discloses the original cost of the asset and adds an agreed profit margin. Profit in murabaha is guaranteed throughout the trade activity and not through interest, making it principle. Under Islamic law, murabaha is commonly applied in asset-based financing such as property purchases, vehicle financing and trade transaction. The process begins when a customer identifies an asset they intend on purchase and apply for murabaha financing from an Islamic bank. Upon approval, the bank purchases the asset directly from the supplier and become the legal ownership the asset. Ownership of the asset is important from Sharia perspective, as the bank must bear the risk associated with the asset before selling it. The bank then sell asset to the customer at disclosed selling price constantly of the cost plus an agreed profit margin. Payment is usually made on difference basis through installment over an agreed period. The selling in price is fixed and clearly known at the time contract is executed. The profit margin remains unchanged throughout the contract period, even if market conditions change. The structure ensures transparency and reduce uncertainty in the transaction. The asset involved must be halal and clearly specific in the contract. Both accounts price and profit margin must be disclosed to the customer. The contract must be free from riba, garhar, and adjust term. Any late payment penalty imposed must be treated as bank income and are usually challenged to the charitable purpose. Murabaha is preferred by Islamic bank due its low risk and predictable returns. However, they are concerned that murabaha may resemble conventional loan structure in practice. Regulations such as a Bank Negara Malaysia and standard stating. However, the concern that murabaha may resemble conventional loan structure in practice. Regulations Bank Negara Malaysia and standard setting bodies like AAFQI have issued guidelines to ensure proper Sharia compliance. One key issue in murabaha is the substance over from problem, where transaction resemble conventional interest-based loan due to weak asset ownership and risk-taking by banks. Different in Sharia, interest on ownership transfer, wakalah agreement, and late payment penalties create inconsistency in regulatory environments across jurisdiction. Market competition with conventional banks pressure Islamic banks to adopt similar pricing and profit benchmarks, raising concern about the loss of murabaha Islamic identity. Late payment charges remain a regulatory challenge as penalties must comply with Sharia rules and be channeled to charity rather than treated as a bank income. The risk and fintech and digital platform introduce a new Sharia and regulatory risk, particularly in asset ownership, contract execution, and automated process. Regulators such as Bank Negara Malaysia and AAQFI have issued guidelines to the Sharia governance and to ensure proper murabaha implementation. Murabaha in Sharia complement cost plus sale contract used widely by Islamic bank. Seller disclose the asset cost and add agreement for profit margin. Profit come from the trade, not interest making in principle under Islamic law finance. Commonly applied in property, we call trade financing. Murabaha Sharia complements cost plus contract used widely by Islamic. Seller disclose the asset cost and adds agreement profit margin. Profit come from the trade, not interest making in principle under Islamic law. Commonly applied in property, we call trade and finance. Subject over from murabaha may resemble conventional loans in banks, not assume real ownership risk, Sharia difference, ownership transfer, wakalah, late penalty, create inconsistent across jurisdiction. Market pressure, competition with conventional bank may lead to reliance on interest measure, weakening Islamic identity. Digital finance challenging online platform and automated process create new risks in asset ownership and contract execution. Regulation lead by negara, Malaysia and AAQI. Surveillance on murabahah make Islamic banking similar to conventional banking, risk differentiating from market al-Sharia. Regulatory preference for murabahah due low risk, reduced use of equity based on contract like mudarabah and musyarakah. Exclusive use of wakalah may weaken through ownership and risk transfer rising. Sharia concern pricing using conventional interest, benchmark affect and distinguish Islamic identity. Murabahah recommendation distinguish Sharia contract strategy government, improve transparency and promote alternative financing structure. Murabahah remains a key Sharia contract in Islamic finance due to its simplicity, transparency and low risk, allowing financing without riba. However, in practice, murabahah may assemble conventional debt when the assumed gaining and set ownership risk, raising substantial over from concern, market competition and digital finance. Further challenge Sharia compliance, especially in ownership, transparency and contract execution. Strong Sharia governance, clear regulation and constitution supervised by bodies such BNM and AAQFI are essential to preserve and integrity. Murabahah should continue to be used but not essentially Islamic banks should display financing by promoting risk sharing contract like mudarabah and musyarakah. The long-term sustainability of the murabahah depends on external practice, regulatory disciplines and blends innovation in line with the objective of Sharia. Masjid al-Sharia.